All right, let's get some insight on the global sell-off with current affairs commentator Einar Tangen. He joins me now live from Beijing. Einar, good to see you. Thanks for joining us.
Hi, Michelle.
So, Einar, trading suspended on the Chinese markets for a second time this week after markets fell below 7%, triggering those newly implemented circuit breakers. Now, why are Chinese stock markets tanking? What is going on?
Well, you have to understand the reality of the situation is quite simple. It's an immature market and one heavily dominated by people who are viewing it more like a casino than an investment option. So when you add those things together, people are trading on rumors. They get in, they get out very quickly. And there's this cascading effect. As soon as things start going down, as soon as they think the limits are going to be reached and markets are going to close, it just gets worse and worse. So the government is reacting to that, but at some point they're going to have to impose some sort of limits, maybe similar to the West, but more, let's say, suitable for the Chinese market.
Well, they did try and regulate things a little bit with those circuit breakers. They were designed to protect investors and calm markets, but they seem to have had the opposite effect, creating more panic, possibly. Now they will no longer be implemented. What impact do you think that's going to have?
Well, I think it'll actually calm the market in the short run. As I said, at some point they're going to return to a circuit breaker mechanism, simply just as a safeguard. You don't want kind of a widespread panic, fueling more panic and going downward in an whirlpool of despair. So these circuit breakers, remember, are not there to interrupt the natural flow of market forces. It's actually just to avoid panic.
Well, we did see panic, and Einar, as you said, it's important to keep in mind that Chinese stock markets are made of mom and pop investors, like you say, somewhat like a casino, and that it's not actually unusual to see such volatility in the markets, and the Chinese stock market is not really an integral part of the overall Chinese economy. In the grand scheme of things, it doesn't really impact things. So why have we seen this trigger a global sell-off? Chinese GDP still officially at just under 7%, and the Chinese stock market not really a barometer of what's going on. Why has this triggered panic across the globe?
Well, I think it's really more to do with the yuan in the sense that there's weakness coming in. I mean, the monetary outflows have been quite large. The Chinese government has been reacting to it quite calmly, but there's fears that the yuan is, in fact, quite overvalued. If you look at the difference between outside markets and internal markets, you can see that there's a clear discrepancy, and this could push things down. Then this compounds this idea that other currencies, which are already devaluing, will continue a race towards the bottom. And this could seriously impact the dollar in terms of its going up and it becomes less competitive, therefore rolling into this idea that this will affect jobs and the future growth of the U.S. economy.
Well, Einar, let's talk a little bit more about the yuan, because there are a lot of things been thrown around in terms of commentary. The PBOC did move the yuan lower on Thursday to its lowest level in 5 years. But it was recently made a global reserve currency by the IMF, and China's central bank, in fact, spent over $500 billion last year propping up the yuan. Now, some are saying that it can't be a currency war, that China isn't trying to devalue it, and that China is allowing market forces to just have a greater influence. What do you think is going on? What is the strategy?
Well, I think over the summer you saw the government, the PBOC, is trying to ease the situation. I mean, what's notable is in the U.S. Congress, there's a bill in front of the Senate saying they're going to punish any kind of currency manipulators, which was clearly aimed at China. It's very muted at the moment because it's clear that the yuan is overvalued by the market. And that's the real barometer here. So people are trying to figure out the impact. But we're also getting back to reality. The fact is you have a very, very not so great world economy, future downward pressures. You cannot expect markets to outperform the reality. And this is where people have to get a little bit more comfortable with these kinds of ideas that it's not going to be double or multiple digit gains. It's going to be single digit gains. It's going to be back to value investing and seeing what things can work as we go forward.
Well, you know, Einar, billionaire financier George Soros has a slightly different take on the matter. He is warning that it could be 2008 all over again. Like you mentioned, the US dollar, he says that China is struggling to find a new growth model, and that's impacting the rest of the world, and that return to rising interest rates and in the US, and that stronger dollar, as you mentioned, are taking a toll on the developing world. And Soros is warning of an impending financial markets crisis. What do you make of that?
Well, you know, George has a proclivity for getting very rich when everyone else is getting very poor. So, I mean, this might be his market bet. But you know, the reality is that before China changed it, everybody was baying at them saying, look, you're running this investment-led economy. It's false. It can never hold up. You're creating bubbles. Now that they're actually trying to change it to a consumption-led, or let us say not change it, balance the economy, people are saying, oh, you're disrupting the world things. The fact is, the world engaged in a lot of overcapacity. All of these companies were out there thinking that there was going to be 12, 14% growth forever in China. That just doesn't work. Mathematically, we always regress to the mean. So it was just kind of dreamland for a while, and now we're getting down to brass tacks. Things are changing. The positive note here, though, is that China is the only economy out there that is positively trying to change the fundamental dynamics of its economy. Everyone else is relying on the market to make this happen. There's been a lot of monetary policy, a lot of fiscal stimulation, but there's a question of whether that actually creates fundamental change.